Hello, ladies and gentlemen. Good day and welcome to the show. Listen, I'm glad to have you guys here on this Tuesday, the 28th of July, 2020. Thank you for tuning in. Now, listen, I've always thought, I don't know why I've thought this way, but I've always pictured, in my mind, the hyperinflationary scenario for the United States over the years, going back a few years. And I've always thought that it would be something that would kind of slowly encroach upon the country, and then the dollar would start to lose value, and it would be something that would take at least 6 months, maybe 2 or 3 years before the dollar was totally worthless. But last night, I was watching the gold market, sitting there looking at gold price going up and up and up, and then the gold price crashed, started to crash down. They smashed it. And I got thinking to myself, hey, what if it's not something that takes a long time, like takes 2 or 3 years or 6 months or 8 months for the hyperinflation? What if the hyperinflation, we going along kind of normal, and then all of a sudden investors just lose confidence? And as they lose confidence, more of them lose confidence, and it becomes a whole herd, almost like a stampede. A stampede could come out of nowhere, but the whole herd moves. And, humanity moves in a similar way. That's almost like they're a herd. They even call them the herd, What if they all just suddenly, due to reasons that are already there, in other words, the Feds print, well, they don't print now, but they're creating money like crazy, pumping it out there willy-nilly, this way and that way. What if all of a sudden investors start to lose confidence, and they're watching the purchasing power of the dollar fall, and they're watching gold and silver go up, and cryptocurrency? And what if all of a sudden they just start to move into these commodities as a safe haven to protect themselves, because there's no money in bonds anymore? I mean, why are you going to buy a 10-year bond and only pays you a half of 1%? When the dollar's losing value much faster than that, you're losing money. So they watch gold and silver going up, and they watch cryptocurrency going up to the moon. And at a certain point, confidence might just all start to be lost, and all the money could all just basically surge in. And when that money surges into these commodities, gold, silver, crypto, what that does is it moves the price of the commodity up and lowers the price of the currency that's buying the commodity. And when massive amounts of money start to do that, it creates an effect that could happen rather quickly. I mean, in today's markets, with investor sentiment can move from one thing to another, just like a lightning bolt flying across from one cloud to another. It can move that fast. This could all just go poof if investor sentiment is... And the Fed wouldn't be able to do anything, because if they print more money, that's the only tool they have. It's worked up till now. It's a very, very powerful tool, being able to print as much money as you want. But it only works provided that people accept that money. And basically what we're talking about here is, if investors lose confidence in the purchasing power of that money, and it's clearly obvious, it's right in their face that this is coming now. There was a time when I was preaching this on my channel where it was like, what else is there but the dollar? There's no place else but the dollar, All of a sudden, they might be starting to rethink that strategy, and we might be heading towards something that is very, very strange. Anyway, listen, guys, let's open up the charts right here. Take a look at gold and silver. They smacked her down. They smacked her down, and it's not staying down. It's halfway back up to where they smacked it, It's at 1950 right now. Take a look at gold, silver. Silver's at 24.51, and silver's bouncing back too, and they're both about halfway up. Silver's not quite halfway up to where they started the smackdown. When silver hits 25, it'll be halfway back up. So they're both heading in that direction. Now, I'm going to tell you what. Gold and silver and cryptocurrencies is the only liquid asset that is, what I mean by liquid is, I mean you can convert it in, it's real money. Sometimes if you find the right person, you don't even have to convert it. They might want it as payment, but it can be easily converted into hard cash, and so it's liquid. It's very liquid. It's a liquid asset. It's not like your house. Your house is not really liquid because in order to turn your house into liquidity, you got to go contact a real estate agent, and you got to wait while he finds a buyer and all this kind of stuff. You know, so it's not immediately liquid. So gold and silver are immediately liquid. So is cryptocurrency. So they're a liquid asset. They're the only liquid assets that have no counterparty risk. Now that's huge. All these other assets in the financial system, you got your stocks, you might be a Robinhood trader, you got your stocks on there, and you actually think that you own those stocks. You don't actually hold them. And the same with your bank account. You think, hey, that money in the bank's mine. No, it's the bank's. Anything that you don't hold in your hand in this modern society is not really yours. You're trusting somebody else to hold it for you. And what if that person says, hey, I'm not going to give it back to you? What are you going to do? Who are you going to call? So, gold and silver are a liquid asset that have no counterparty risk. If you're holding it in your hand, it has no counterparty risk. That counterparty risk is the other person that's holding your asset. That's the counterparty risk. That's huge. It's the only liquid asset with no counterparty risk and limited in supply for both cryptos and gold and silver. And, it's divest from the dollar. It's the only thing that's divest from the dollar that's liquid that you can buy. Now, you would think, like a person that's a layman out there that's not used to the world's financial system, they would think if you mention to them you want to divest from the dollar, you want to leave the dollar and branch into some other asset class. They would think, because they're a layman, they would think there's probably 1,000 other places you could put your money other than the dollar and be in some other asset class. But once they study economics, they find out that for the longest time, there's only gold and silver. But now there's gold, silver, and crypto as a way out. That's the only exit door. And what we're talking about here is a full stadium. All it needs is the fire alarm to go off. And they're all going to try to run out that exit door into this one little thing, gold, silver, and crypto. And I say little because all three markets are not big. They're not big markets compared to these markets that are so full of counterparty risk. Gold and silver, it's a narrow little door. In fact, I've heard a number of people have tried to explain this in many different terms. Like an elephant squeezing through a garden hose. That's what it's going to be like. So if you're holding these assets, if there's a mad panic into them, out of the dollar, oh my goodness, the amount they could go up. And we might be seeing signals of that in these markets already. Even though they've smashed it down, we might be seeing signals. Cryptocurrencies today. $324 billion with a Bitcoin dominance of 63.1%. Bitcoin dominance is getting up a little bit higher than I like it right now. $11,113 for Bitcoin. And Litecoin's at $54.76. I always look at Litecoin. Ethereum's 317. I'll tell you the coins I like. I like Bitcoin. I like Litecoin. Because those are the original coins that this whole plan was put together on. These other coins came along because the open sourceware, the open source coding was all there, and all they had to do was just make a coin. But originally, as Bitcoin was going to be gold, Litecoin was going to be silver, and this is why I think that these two coins are on the Lightning Network. The Lightning Network was going to be the distribution plan. I think it was all planned out years ago, and it's still the plan. I think is still there. And so that's why I think that these two coins are, in the end, I think they're going to be sitting 1 and 2. Tell you honestly, that's what I think. I think they're going to be sitting 1 and 2. And that would mean just like real physical silver has a long way to go to catch up to the 10-to-1 ratio of gold, which is where it should be. Litecoin has a long way to go to catch up to Bitcoin, to be in that ratio to Bitcoin too. It's way out of whack right now. I think it's what is it, 200 to 1 or something? About 200 to 1? It should be around a 1 to 10. Actually, 1 to 4. Because gold's ratio, that gold and silver come out of the ground, is 1 to 10. Bitcoin to Litecoin ratio is 1 to 4. So it should be 25% the price of a Bitcoin. And I think that when she moves finally up into the second place, Bitcoin's number 1, Litecoin's number 2, and I think that's where it's going to go in the end. Because I think that these guys, whoever they are, that made the Satoshi, I think whoever Satoshi is, I think the original plan was Litecoin and Bitcoin 1 and 2. I think that, who knows who Satoshi is? I think he's about as real as Santa Claus. But I think there are people out there, a group, that were like Satoshi, a group of scientists or whatever. Or maybe a group of the most powerful people out there. I just don't know, but Satoshi, it's Satoshi. Anyway, let's take a look at the Dow Jones Industrial Average. It's down 99 points on the day, 26,484. This thing really, honestly, guys, this thing could roll over into a massive crash like you've never seen before and move so fast because there would be no floor. It's like falling down an elevator shaft. That's what the stock market can do. And the only floor that's going to get under is from the Fed. And I mean, the Fed will react, but how far could it fall and how fast before the Fed jumps in there and say, okay, we're not going to let it fall any further? Well, last time it fell to 18,000 when that happened. Crude oil, $41 today. U.S. Treasuries are down again. We're looking at 0.59 for the 10-year, and we're looking at 1.23 for the U.S. 30-year. And the U.S. dollar is at 93.70 and going along sideways today. Thank you guys for listening to my show. Like and subscribe. Give me a thumbs up. And we'll catch you guys in the very next episode. Bye-bye.